Hello everyone. Once again I'm back with the topics like financial management. I will be giving you only the introduction of financial management. That means why we need to study the financial management, what is the requirement in our daily life, how to manage our finance. Now from itself you can understand the word financial management. So let's move on to the next slide. The contents that we are going to cover in order to understand what is financial management, they are as follows. We need to understand the concepts by differentiating with the accounting domains, with the other accounting domains, which includes the cost accountancy, which includes the financial accountancy, as well as how both of these domains merge and relate to financial management. Definition. Then we have scope, and last we have the objectives. Let's move on to the next slide. First, we need to understand what the concept. The first we have the financial accounting. The financial accounting deals with the classifying and the recording of the transactions. So what do you understand by the classifying and the recording of the transactions? As if you have made a business, there are some things that comes as a sales that sometimes we do purchase. We just need to record in order to ascertain our profit. Simply, no other ways we are going to use our brain. We are only going to record what comes in and what goes out, what is the things remaining in our hand at last. So we do it by our final statements, final accounts, that is through trading, PL and balance sheet. It's not possible to cover all the things in the slide, so I'll be taking off only with the balance sheet part. Like balance sheet, after ascertaining your net profit, you will be getting on the liability side, you have the shares, bills payable and the creditors, and on the asset sides we have the investments, bills receivable and the debtors. After the financial accounting, let's move on to the other domain, that is the cost accounting. The first we have only recording of the transactions. Now second we'll have how cost effectively we need to use our cost in order to minimize the cost and also to generate huge profits. So cost accounting, it deals with the procurement of the very cost effective inputs in the organization. Now this cost effective inputs can be done through a better quality inputs through the ABC analysis or through the VED analysis, or we can do the materials management through various methods like LIFO, FIFO, weighted average stock, etc. Along with that, with the materials, we have the inputs. Like inputs includes the materials, labor and the overhead. So those materials management I have discussed. Now the labor management, overtime or idle time, HALSE, Rowan plan, everything. All these comes under the cost accounting. Then we have the last, which is called as the financial management. This financial management is the merging up of all the other domains. In both the domains, we haven't seen any kind of management. We have only seen the recording of the transactions and a little bit of management by effectively using the cost effective products. But the whole management in general, it means along with the recording of the transactions, along with the cost effective products, we also need to gather the funds, utilize those funds, make our more and more sales, get our more and more profit, and then those people who have helped or invested in our business, we can also give dividends to them. So this has become a cycle where you get the funds, where you use the funds, where you get your materials, where you use the materials, where you record all the funds, materials in a very effective manner, and then you make a huge amount of profit in order to ascertain more amount of profit, in order to provide a lot of retained earnings to your business, as well as you provide dividends to the other shareholders. That is your financial management. That means managing the whole business, starting from the mobilization of the funds and ending till the disbursement of the funds, along with the enrichment of the organization. So we have various things that comes into the financial management, the chapters that we do cover, like leverage, time value of money, capital budgeting decisions, cost of capital, etc., etc. Okay. Now, let's come up what is the definition of financial management. So, it is the process of planning, organizing, monitoring and controlling all the financial resource in order to achieve our organizational goals. What is this organizational goals? Which includes procurement of funds, matlab gathering of funds, utilization of funds, recording of the accounting, making the payments, whether there will be risk or not. By initiating this particular project, we need to cancel, or if there is no risk, then we need to make our own business by suggesting the project. So that is the risk assessment. And every other thing in general, all the things related to the money, which our financial accounting or cost accounting didn't gather all these domain. Now let's explain. For example, I am a shareholder. I want to invest in some other business. I am a shareholder. Now the thing, why did I invest? Because the owners promised me, or not the owner, the company promised me that every year the amount which you have invested, the company will provide me every year the double the amount as an whole interest. So if it is double the amount, then for the long term it is very beneficial. So let's take this example. I have invested, then what could be my interest? For example, I have invested 100 rupees, and in the next year my return will be 200. Again, this 200 I am going to invest. Again, my return will be 400. Again, on the third year, I am going to invest the 400. Then my return will be 800. Again, on the fifth year, 800 into 2 will get the 1600. So, for the consecutive 5 years, our money is getting doubled. Now, if it's for the long term, for the 25 years and 30 years, see how much money we can make. So I, being a shareholder, is going to invest in this business. As you have seen the calculation here, this is the planning that I'm going to give my shareholder this much amount of money. Now we need to organize. How do we organize? That every time you can see the trees are going up and up and up. It's growing, as well as the money is also growing. So the investment will be double. So this is the procurement of the finance, assessing, risk assessment, and how it can be utilized in order to gain more and more profits. Lastly, we have the monitoring the procurement of funds and expansion. All these things comes under the financial management. Let's move on to the next slide. We have the objectives. The main objectives includes the procurement, allocation, control of financial resources of an organization, ensuring regular and suitable supply of funds, optimum utilization of funds, and last, creation of stable capital structure, ensuring safety of investments and adequate returns to the organization. Now, from the previous understanding, we got the idea about the financial management. Now, we will discuss about the 3 scopes of the financial management. Those 3 scopes are dividend decision, investment decision, and the financing decisions. Now the first scope which we are going to discuss is the financing decisions. Okay, the financing decisions deals with from where the money comes into our business. This is the money that comes into our business. This is our business. Then a firm tends to profit most when there is market expansion of funds. It also includes many factors like risk, cost cutting, cash flow management. Mainly these financial decisions, there are only two types through which we can sources of raising the finances possible. Financial planning decisions always attempt to estimate the sources and the possible application of the accumulated funds. Mainly this financial decisions includes the capital structure decisions that involves the identifying the various sources of the funds which may be long term or which may be short term. These things are required for the financial decisions. Then we have the investment decisions. In which asset we need to invest. If the investment in a particular project gives a good value, then we are going to suggest yes, okay, we are going to do with this investment. If it gives a risk or is a negative value, then we will be suggesting a big no. So the decision depends upon the return that we are going to get in our near future. So this investment decisions, again, they are made based on the two ways. Long-term investment decisions that determines the performance of the business. It mainly investment is mainly committed on those resources like fixed assets. And there is also another type of investment, that is short-term investment decisions, or which we can also call it as working capital financial decisions. Means committing the funds towards resources like current assets. So the short term is the working capital decisions, commitment of funds towards the fixed. Short term is like working capital decisions, and the short term has commitment of funds towards the liquid assets, and this long term will have the commitment of funds towards the fixed assets. Now this dividend decisions. Dividend decisions, as you can see, there is investment, shareholders, and then we have the next level of return on investment. This dividend decisions, as you can see, deals with the net profit distribution as dividend to the shareholders. So this is a shareholder. He has made an investment of this much and he wants to get the return. So what can be the return? This much is the return. So this much return which you are going to get, the whole calculation is made upon the dividend decisions made by the company. And this dividend is being given mainly to the shareholders after getting the profits or after attaining the net profit. And those net profit, then you can get the dividend which is being required, which you need to give to the preference shares, to the debentures, and last the whole lump sum will be amounted to the shareholders. And this dividend decisions, in this decision we also need to ascertain the retention of the earnings, that how much earnings we need to retain in our business, in our company's fund, in order to make our smooth business running in our near future. So this dividend decisions has many dividend policy approaches which you are going to study in your later chapter, like Walter model, Modi, Gilani, Miller model. These are used to make the dividend distribution decisions. Now let's finish off our presentation. Hope you have understood, and if there is any problem, you can clear your doubts by mentioning in the comments box. So let's wind up the PPT. Thank you.